Well, actually, we're not going away from pharma just yet because the other major company where there's been a disappointment is Lupin. Let's pull up the stock. It's down about 6 to 7%. Now, optically, the numbers seemed actually very, very good for the first quarter. But if you look at the adjusted revenue, then that missed estimates. And more importantly, like we've seen with certain other pharma companies, even for Lupin, the US business performance came in lower than expected. Let's take this forward. Nilesh Gupta, MD, and Ramesh Swaminathan, ED, Global CFO and Head of Corporate Affairs at Lupin now join in. Thank you, gentlemen, for being with us. Good morning to both of you. Nilesh, first up, that big concern, the US business coming in below estimates. What led to the underperformance, and is there a lot of pricing pressure?
I think that is really the heart of the matter, especially for this past quarter. The US business disappointed in Q1. Coming significantly lower, like you said, about 20 million lower than what it should have been. Unfortunately, in Q1, it was a bit of a perfect storm in the US. So one, famotidine had additional competitors that came in. Two, albuterol came in lighter than what it should have, mainly because we were bolstering long-term customers rather than the spot purchases that we'd been doing in the past, and the pull-through was lower than what it should have been, and there was certain price erosion as well. So I think these three things together, along with failure to serve with certain customers, all of these 3 or 4 things added up to depress the US numbers. We do see them picking up Q2 onwards. Again, the albuterol pull-through will pick up from August, and we expect from the 12-13% to get to that 18-20% by the end of the second half. So we do see significant increase in the US, especially in the second half.
Okay. All right. Well, Nilesh, the big talking point across pharmaceutical companies this quarter has been pricing pressure in the US. You touched upon it, but what is the extent of price pressure that you saw in your base portfolio, as well as key drugs such as your anti-ulcer drug, famotidine, levothyroxine, which is for thyroid, as well as your diabetes drug, Lumetza?
Sure. So I think famotidine was an exclusive, pretty much an exclusive generic at one level, and I think with 2 competitors coming into it, it's taken away a significant amount of the top line as well as the margin. Across the board, I think the margins remain in that single-digit kind of price erosion in the US. Again, one of the customers put out a comprehensive bid, and I think that impacted in this quarter. That is not something that you expect each and every quarter. So, I like to look at these things more in the long term. And in the long term, we see that high single-digit kind of price erosion in the US.
Okay, so then what is your exact outlook on the pricing pressure, Nilesh, in the US going forward? Is it just purely a product or portfolio-specific issue? Or do you think that it's an across-the-board issue which will take some quarters to settle?
Sure, and I think that's a great question because we have to peel this onion. To me, the largest story is always product specific. Like Vinita said, in our end stage, we should have a couple of albuterols coming to market every year. And because you are going to have products, they are going to come down. So there's one part which is the across the board price erosion, where last year it was very light. I think customers are coming back with a little bit more this year than last year. But I think the bigger story, so I think there was always price erosion. So there is going to be price erosion, whether it's in the low single digits or the high single digits, over a period of time, that's where I see it to be. The bigger story becomes individual products and how they do. And from our perspective, again, famotidine, like we talked, was a very significant contributor last year. Now it's come down. Thankfully, albuterol is ramping up to more than offset its place, but you have to watch this at the product level.
Well, market's really listening to you. So low single digit or high single digit, but single digit pricing pressure is here for now in the US markets. That's a really important takeaway. Now, albuterol specifically, are you in line to achieve 20% market share by the end of this fiscal? And what is the status on the other drugs such as Brovana in the US?
Yeah, insofar as albuterol is concerned, we are doing about 12 to 13%, and it's coming up pretty well. It's evolving very well, and we think it will certainly ramp up during the course of the year, and we should be touching about 20% market share as we kind of expected. Brovana AG has been a successful launch in this quarter, and we certainly expect it to grow in the quarters to come for sure. Insofar as Europe is concerned, we are in the process of launching Foster, and of course it'll also evolve over time in terms of when the double strength and so on the higher strengths get launched out there. So the inhalations portfolio in a general sense is evolving very well, and we expect it to contribute substantially to both our business in America as well as Europe.
Okay. Nilesh, can you tell us what is your guidance on the US market then? What is a quarterly run rate in terms of sales that we can expect? You've done $172 million. Street was anticipating $195 to even $200 million. So where exactly do you think you can probably average or sustain?
Sure. So to me, the critical mark for the US is north of 200 million, right? So, the sooner we get there, the sooner our margins get it to an acceptable level, the sooner the EBITDA gets to the right level as well. And when we go to, the 170s, that is not where we should be. Like I said, Q2 is going to be in a state of repair. It's going to be higher than Q1. I'm not sure whether it'll breach 200 or not. Certainly in Q3, Q4, we should be well north of that, rounding off to a nice number by the end of the year. And on that number, we expect growth, right? So that's where you expect injectables to come, you expect tiotropium to come, you expect a pretty stable portfolio of products as well. Again, one of the things that we've lost out on was the entire cephs, right? We're one of the big players in the cephs. There was no flu in the US at all last year. People are guiding possibly to a 30 to 50% level of flu this fiscal. Again, that will be an increase over last year, but it's still less than optimal. So there is a lot of room for growth here, and we absolutely have to get to north of 200 million and then keep it at that number, at that quarterly number for the US.
Okay, all right. $200 million is the quarterly run rate for the US. That's what Nilesh is guiding. But Ramesh, the other key point was the margins. That was the real big sore point also this quarter. Adjusted for licensing income, it came in at around 14.2%. Street was anticipating 19 to 20%. Was it due to price pressure? Any adjustments in one-offs this quarter?
So let me tell you this, gross margins as a percentage is down to about 63.9%. One of this is essentially because of the fact that we altered the way we reported partner products in America. Essentially it was royalties on partner products which were reflected earlier in SG&A spends, and we now kind of reclassified it as cost of manufacture itself. And that brought down the gross margins a bit. Whilst the overall quarterly profits were bolstered by Boehringer Ingelheim, it also kind of reflects a tough operating environment, and we see that there is substantial room for growth out there. Other expenses, in fact, I would say it was in line with our own expectations, but there was of course higher employee costs, principally because of the fact that Q4 last year was significantly lower because of reversals of certain incentives and the like, and that is the reason why you think that the employee costs have actually gone up. But we are actually maintaining this on a tight leash, and this would be the way it's going to be reflective of the next 3 quarters would be reflective of what we have done in the first quarter. Manufacturing lines, because of in fact the reclassification was down a little. R&D expenses were about 9.7% of sales, and we expect to hold this tightly during the course of the next 3 quarters. Overall, EBITDA margins are lower, and we are not happy with it. But that said, we are confident that we will be able to kind of repair this during the second half of the year. And overall, I think we would be closing at least closer to what we guided, was to upward of 18% as we go by.
Okay, and what is the margin guidance then for the year, Ramesh?
I would say about 17 to 18% at this stage.
Okay. All right, Ramesh, as well as Nilesh, we're going to wrap up on that note. Thanks very much for joining in and speaking with us. So that's the word really coming in from Lupin. And in fact, the stock has fallen a little more as we spoke to the management. Stock is now down around 7% at this point in time. So it's really a twofold factor which has impacted the stock this time. US price pressure, US has come in below estimates, 172 million. And we also have the margins which were under pressure, 14.2% on an adjusted basis. Remember, Street has ignored the fact that, the India growth has been strong this quarter. It's up 26% on a Q-on-Q basis, 27%. So the Street has just brushed all of that off at this point, because even India has come in lower than what other companies have reported.
I think it's also the sentiment in the market, at a time when everything is selling off, the market is sort of not willing to give any benefit of doubt to companies that are reporting any weakness in numbers.
But just the opposite right now, Sonia, Indico has come out with a very good set of numbers.